Here we go. Starting. Yeehaw! It's offline. You're receiving your content, and here we go. We got like 1 minute to go. All right, that one's good to go. That one's good to go. Put this one up here. All right, and then this one right there. Here we go. All right. Well, good afternoon or good evening, everyone. This is James from the 10-Minute Trader and MoneyMakesLifeEasier.com, and also all that fun, nice, neat stuff, dividends for cash flow, dividends investing. What we do here basically is teach you how to invest in safe, secure dividend stocks in order to get a higher return, higher rate of return. If you're used to getting single-digit returns, we're looking for you to get double digits, 12%, 15%, 20%. Some people even get as high as 50%. I have one client who averages around 50% per year. I'm not saying that you're going to be able to do it also. I'm just saying it's nice. Yeah, she's right on the ball, and she does excellent. Anyway, today it's 9 o'clock. Thursday, December 15th, 2016. Here we go. Now, we're normally looking at 10 days out. So 10 days out from today is the 29th. Okay, so we're looking at, well, we can't really count today because we're after hours. So tomorrow will be the 16th. So we will be looking at anything trading on the 30th. So quickly, let's go take a look at who's trading on the 30th. Let's go to the Market Watch. Market Watch. There we go. And looking at the 30th. Doesn't that go figure? They don't have anything. This is just weekly options. They don't do it until like 2 or 3 o'clock in the morning while the Fridays come up because they only go 10 days ahead of time. And today is the 15th, so 10 days ahead of time is the 29th, which there's nothing on the 29th. So we were not going to see the 30th until like 2 or 3 o'clock in the morning. But anyway, this is where it would be. And right now I have it listed for weeklies. And that's today, right there. And how do I get rid of the weeklies? Clear filter. There we go. That's the 15th. Let's go to the 30th. No such luck. It only brings us to the 29th. Okay, so that's who would have been on the list for today. Let's bring it up and see who we're looking at. The 29th. There we go. Drag it up so that we can see all 29 stocks. Here we go. AFSI, APB, BNS, CAH, all these, OOC, PKA, all those. See if I know any of them off the top of my head by just looking at them. I don't really tell who's who. Anyway, I believe is Alcoa. I'm not 100% sure. Nope. Agilent. Don't even know who Agilent is. Alright, so let's go into what we normally go into for the first part of the show. Is we're going to look at dividend stocks that actually paid out today. Okay, because today was EX for 23 companies. Now we want to go high to low and see who we're looking at because we don't want to even bother these last three. 9 cents, 7 cents, and 6 cents. Don't even want to look at those. But today being the 15th, 10 days prior to today would have been the 1st. Okay, so we are looking at the 1st. Let's bring up DTE. And here we go. DTE comes in a low of down 78.23. A high way up here at 129 cents. Last 90 days, this is what we're looking at. High way up here on 100. And the low way down here, 89. Okay, so we said we want to look at the 1st, which would be right there. Now, Do we even really need to look? Did it make the 82 cents? I'm pretty sure it did. We're looking at an 82-cent dividend. The opening on the first was 92.49. The high of the day was 93.66. So yeah, it made its point. It made its target right in the very first day. Now, I like telling people, if you're going to use a stop loss or a stop or an exit point, great. Why not use a trailing stop? That one gets to move up as long as the stock moves up. Now, a trailing stop is very interesting. It depends on how much wiggle room you give. All right. Let me see if I can quickly do one to show you what it looks like. More DTE, quick quotes, trade right here. Okay, they're asking 100. So let's click on that. Let's go buy. Okay, so it says buy 100. Now, let's see if this comes back to me. First, we have to go to, I believe, first triggers 2 OCO. One cancels other. Okay, limit order. We want to do trailing stop limit. Okay. Now, let's see if we can finish doing this. You buy 100 manual at no, this one would be the market price. Okay. Create opposite order. There we go. And we want to do a trailing stop. There we go. Okay, so what I just did is I created a trade parameter, or a specialty trade. Now it's going to buy 100 DTE at the market price. Okay, first thing in the morning. Okay, then it is going to sell exactly what you just bought at trailing stop. Now that gives me plus or minus 10 cents. Plus or minus 10 cents on a $100 stock is kind of silly if you think about it. Let's come over here and take a quick look. Okay, so it opened at 92.49, 93.66. You know what would come in handy right about now? The other software. It gives me the average of how much the stock moves on a daily basis. Now let's say I want to give it a 50 cent a 50 cent movement to allow it to move 50 cents, 0.50. Okay, so if it drops below 50 cents, then it what do you call it? Stops out. Okay, so what I want to do now once I set up the trailing stop, I want to do, I believe it's this one right here. Yep. And I want to erase all this stuff. And I just want to write trailing stop minus 50 cents. All right? 0.5. Okay, trailing stop with 50 cents. Okay, so I'm going to hit save. Now watch what I do. I delete this. All right, so I deleted it, or it looks like I deleted it. Bring the cursor up here to the ask price. Right click. Okay, now you can buy it, sell it, or buy custom. Now when you come in here to buy custom, it opens up this right here. These are your saves with the OCO bracket, stop limit. And these are my specialty trades. And here's the trailing stop I just did just now. So if I click on this, it's going to automatically populate what I just put in. And there it is. Now, considering this is a $100 stock, I want to figure out how many shares I want to buy. So I open up my calculator, and if I have $5,000, I want to take the $5,000 and divide it by 96.69 because that's the closing of last day, and it'll tell me how many shares I'm going to buy. You just double click on here. Say if I can only buy, let's say, 98 shares. So it's like 98. Come down here, and I got to change this one also to 98. Okay, buy 98, sell 98. And then you just hit confirm and send. But I like keep mine at even 100 increments. Okay, so 200, not bad. 200, there we go. I press confirm and send. Should be exactly 5 orders in the first trigger OCO group. I'm gonna have to do some more research on that one, but that's basically what you do. Alrighty. So we found out the DTE is going to do what we wanted it to do, but if we did the trailing stop, look at this thing, it shoots way on up. You probably would have been stopped out right here when it retraced back, or I don't know, because if you held on for another day, look at where it opened. It opened right there, and it started dropping, and you probably would have been called out. Okay. See, it goes up, 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 doji, up, 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 up. This thing opened up here, right, which is a gap up. It gapped up, and she filled in for the day and dropped down. But you would have been called out somewhere in here, depending on how wide of a spread you left for your option, for your trailing stop. Can somebody stop rattling my head? It's hard to keep track of everything. The trailing stop, depending on where you have your trailing stop set, how much wiggle room you give it will depend on where you're called out. Okay, so let's move on to the next one. Back to the market watch. Bring that up. EXR. This one doesn't look that great. We'll really have to see what it looks like in the other software. So just for the fun of it, let's pull it up in the other software. Now this software, EXR, you can get as part of your membership. So if you're a member of the 10-minute trader, then you'll be able to get in on that and be able to use this software, because this stuff is really fascinating, even though I did make it myself. All right, so here we're looking at ones all the way across the board. I like this. 10 years worth of data. That's great. The average is 1.5. 1.5. So in that area. Okay. The high of the year is 94. The low is 68. The dividend is, this is awesome. The dividend is 78 cents. And the yield is 4.1%. The average volume is 1.3 million. Great. Look at, here's the dividend date. 10 days from 10 days. Yeah. All right. If you got in 10 days prior to, the stock went up, came back down a little bit right at the dividend date, and then what happens after the dividend date? It just keeps on going straight up. So this one, if you wanted to play it really extremely safe, you get in 10 days prior to, you're collecting all that run up right up to the dividend date. You collect the run up, you collect the dividend, and look, you set a target for whatever you want to sell it for afterwards. Okay, this is what you're looking at beforehand, so it gives you an idea. Hey, this is what it's going to look like, so why not do it? All right, that one looked good. So let's go back to here. Last 90 days. Let's bring it up to the first. Where is the first? Right there. Okay, so you would have got in at the first. The opening on the first was $69.85, and we're looking for 78 cents. $69.85. It didn't make it on the first day. I went to 70.44, which is 15.44, which is 59. So I only made 59 cent move that day. But however, the next day you're at 71.32. So if you're just doing the dividend equivalents, looking for the run-up before the dividend, you would have been out the second day. If you get the trailing stop, you would have been in, and look at the nice little run-up way up here, and then would have jumped over to this day, and who knows where you would have gotten out. I don't know, but it's a nice move. The high is 76 from 69.85. That's 15 cents. $6.15 move. Ooh, that's awesome. That's almost just a little bit less than a 10% move in the stock. All right, that's EXR, LAMR, Lamar. Okay, this looks pretty good. You get the high, 69, the low at 50. Right now she's settled around 66. Now let's look at the first. Where is the first? All right, here's the first. Okay, so we're looking at a 76-cent dividend. Okay, she opened up at 65.98. The high was 66.49. It's 51 cents. So no, it didn't make it in the first day. However, the second day, 66.79, does make the target. So if you added, the 76, right here, see the 76 dividend onto the opening price. Here's the opening right here. The opening on this day was 65.98, and you add 76 onto that, you're looking at 66.74. No, 66.74. Yeah, 66.74. So when does it hit 66.74? Not the first day, but it does on the second day. And then you have your, again, trailing stop would have brought you all the way up to here. You've been called out on this day. Okay, GEFB. It's a good possibility it doesn't have any data on this one. Well, that one's not doing it. OMC. Okay, we're going to skip over GEF.B because apparently it doesn't want to open up. OMC. OMC, looking at 55 cents. The low's way down here at 68.25. The high's way up here at 89. And right now she's around 87 the last 90 days. Okay, low there, comes up here. Let's look at the first. Where's the first? The first is right there. Okay. That's the first right there. We're looking at 55 cents. The opening was 86.80. And the high of the day was 87.77. So yes, it did make the high of the day. So you would have been in and out the very same day. Trailing stop would have brought you over to the next day. You probably would have called out somewhere on there anyway on the second day with the trailing stop. Remember, there's a difference between a stop limit, and a trailing stop. And then the trailing stop limit can be confusing. But, let's try not to confuse it. MITT. We're just going to do a couple more before we're done. MITT. Okay, MITT has a low of $10.86, a high of $18.83, and we're looking for a 47-cent dividend. And where's the first? The first is right here. Okay, so MITT, 47 cents. Oh, it's AG Mortgage Investment Trust Incorporated. Okay, 47 cents. Let's look at it. 1756, 1775. It did not make it on the first day, second day. Okay, what is the number? Okay, opening 1756 and 47. 96, 103. Would be 1803. Is that right? 1803? Yeah, 1803. So when does it hit 1803? Not the first day, not the second day. not the third day, the fourth day, out on the fourth day. And trailing stop would have brought you all the way up to 1885 and be settled out somewhere. Depending on, you have to set your trailing stop in accordance to the stock price and the average moves that it makes on a daily basis. If the stock only moves a 0.5%, it's a very small amount. If it moves like 3 or 4%, it's a larger amount. You have more wiggle room. That's MITT. Let's get out of there. Let's look at the last one, CHRW, and that will be it before we move on to the next one. CHRW. All right, the low of the year for CHRW is 61.57, and the high is 77.77. And we're looking at 45 cents the last 90 days. Okay, low way there, low 65.66, and the high still the same, 77.77. And we're looking at the first. Where's the first? Here's the first right here. Now we're looking at 45 cents on the first. Opened at 74.82. And the high was 75.18. Didn't make it on the first day, but she did make it on the second day. Okay, so you've been out on the second day. So far, everyone I showed you would have done it had you got it in 10 days ago, except for GEF. I don't know why I can't get into that one. Yeah, some strange reason it's not opening up. So we're just going to bypass it. You don't want to see it anyway because there's nothing you can do about it. All right, tomorrow's the 16th. There's 25 companies going EX tomorrow. Not going to do you any good. Look, ooh, Tupperware, Tiffany. Everybody's heard of Tiffany and everybody's heard of Tupperware. Horizon, you heard of them. That's about all I know off the top of my head. All right, so let's see what's happening on the 30th. Can't do anything on the 30th, but the 29th we can. Okay, so let's see who's the front runner. Front runner's FRT. FRT. Okay, FRT has a high of 170 and a low of 134. Let's take a quick look into the software. We're looking at FRT, and we're looking at the 30th. FRT, and we need to go on the 30th. Okay, here we go. Plot the dividend, and there you have it. Okay, ooh, look at that. Nice numbers. 2.5, 3, somewhere in that area. Let's get just to the average. All right, so if you buy this thing in the morning, look at that. 10 days prior to the dividends in 10 days, it's going to shoot up nicely. Or that's what it's done on average. Is it guaranteed? No, but that's what it's done in the past. Okay, after the dividend, she's going to drop about 2 weeks before she moves back up. And you'll be back out with a nice profit in 3 weeks. Okay, that's it for that one. Now, for the fun of it, let's go to FRT and see what kind of options they have available. FRT. Okay. Only has monthly options. Okay. Not really fond of monthly options, but for some of you out there that don't have all the time that I do to dedicate to put that in there, let's take a look what the monthly option offers for FRT. Okay, last 30 days, this is what we're looking at. It's at 138. Now, I like doing the spreads. Okay, so we do the 130, 135 spread for a 10-cent credit. That's not worth it, especially on a $100 stock. No thanks. 135, 140 gives it 36 days, which is a month. Do I really think it's going to go up that much in a month? And do I really want to buy it? No, that's too much time. It's tying up my money for too long of a period. Now, if you want to do it, hey, that's great. How about we look at covered call? Remember how the software, I'm going to show you in a second. Let's go for a covered call. Let's just do single. Okay, so if we bought it at 138, I want to give someone the ability to buy it from us at 140, we can make $1.40 off of that. Get rid of that. Okay, so $1.40. No, what was I going to say a minute ago? Oh, let's get this one back to where it was. There we go. What was I saying? Okay, let's put it into the other software to see. Oh, yeah, to show you what it was doing. So give you a better idea. Okay, here's FRT right here. Now, 10 days prior to the EX dividend, it's going to go EX in 10 days. Okay, so you can get this tomorrow still, and you get 9 days for it to go to EX. That it shoots up between now and then. This is what it has done. Doesn't mean it's going to do it exactly, but this is what it has done in the past. This is what the software does. It shows you the patterns that it has done in the past. So if you're looking at 2006, there's 2006. Okay, you buy it here, and it goes up. 2007, you buy it here, it goes up, but then it shoots back down again, so you could get out. Who knows? 2008, same thing. Buy it here, it shoots up, then comes back down. 2009, starts here, shoots up. 2010, starts way down here, shoots up, just keeps on going. 2011, same thing, comes down here, shoots up, retraces, and then shoots back up again. 2012, not as great as a play, move upwards, but it does. It goes, starts here, moves up, pulls back a little bit, goes sideways, and then goes to the moon. Okay, 2013, ooh, nice. It starts out low and just keeps on going. That's a nice one. 2014, same thing. Comes down low, shoots up, keeps on going, goes sideways, and then backs down again. 2015, which was last year, same thing. Comes down low, comes up into the dividend, retraces back, goes sideways for a while, and then shoots up. Okay, so this thing has a tendency to shoot up coming into the dividend. So 10 days prior to the dividend, she's going to move up, and then for the rest of the 90 days, she's going to go up again. So if we got this, like tomorrow, from what it says, let's take a look at theirs. From what it says, it should move up a little bit, retrace into the dividend, and then keep on going. Okay, this is what it's done this year, and this is the historical pattern, what it's done over the last 5, 10 years, whatever. This is where we are right now. Okay, she's here, and what's she going to do for the rest of the year? I gotta say it. Hypothetically, what's she going to do for the rest of the year? Based on history, based on the last few years, this is what she's done. A nice steady flow up. Okay, so if we buy this one tomorrow at 138, okay, we sell the 140 at $1.40. What you're doing is you're adding, take 140 and you're adding the 138, that's 90, $1.91. So $1.91 and 140, it's 2, that's 330, 330 something. Okay, so 330 something into, all right, let's go, let's look at 1,000 shares. 1,000 shares will be 10 contracts. And we're looking at 69,000. Okay. So 69,000. We got, how much was that? $1.40 and 191. $1.40 and 191. Okay. 140 plus 191. Oh, 192 because 98. Yeah. Equals 332. And how much is that trade going to cost me? The trade is costing me 69,000. Divide 69,000. Okay, that didn't work out right. .8%. That can't be right. Yeah, 332. 3.32 divide 69,000 equals, okay, 4.8%. Okay, that's not bad. 4.8% for a month. If you want 4.8% per month, that's not bad. It's like 1% a week. I personally don't like it, but hey, that's not me. I like the weeklies. Okay. All right, so that's FRT. Am I going to do it? No, not enough for me. I want to do just the weeklies. So let's see if we can find a weekly that's going to pop up. All right. And here we go. And we have 12 stocks for that week, because Friday hasn't showed up yet, because we won't see Friday until tomorrow morning. So there might be some companies that have a weekly option on Friday morning, but we won't see that till tomorrow. Okay, so let's take a look at DE. DE, isn't that John Deere? I don't know. Look at that. Moves up nicely. I like that. So let's take a look at DE. I want just the average to show. All right, DE, I like this one. All right, tomorrow's that. Nice move up into the dividend, a little pullback, and then a slow progression upward. That's a weekly option, so we can actually do that one and show you what we're looking at. Okay, let's go back to the regular chart. Click on that icon there, bring it over to the standard. And this I don't like. There's that big gap up right there. I don't like those. Because big gap ups mean there's got to be a reason why it did that. Because they have usually a tendency to fill. So, not liking that idea at all. All right. I'm going to show you DE just in case one of you guys out there wants to do it. I'll show you what I'm looking for. Let's delete that. DE John Deere. This was one of the examples from last week. Okay. DE. Do I even have DE? No. That must be the other trading account I did that one on. Okay. RL. Ralph Lauren. Let's take a look at Ralph Lauren. RL. High up here for the year of 116. Low down here at 82. It looks like a sideways chart. I really don't like it. Look at all these gaps. There's a big gap there. There's a big gap there. It's going sideways last 90 days. Look where we are right now. Okay, now, remember, this is on the 28th. So 10 days prior to would have been the 14th. So you should have gotten this on yesterday. So do I want that one? I'm not 100% sure. Because look at 1, 2, 3, 4 down days in a row. Now, it's a possibility, considering they do have the dividend coming up and it does have weekly options, that they could, let's pull up another one, that they could just continue on going up. And we want RL's Ralph Lauren, right? RL. Okay, average. Okay, now RL, I don't really like it because you buy it up here. What does it do going into the dividend? It goes down. You get to the dividend, and then it goes up a tiny bit. Do I want to take that chance? I don't know. It goes down sideways, but doesn't. It's a possibility, because it's down here and then it shoots up. It goes sideways for 2 months. It's like 60 days right here. So like 20 days, 40 days, 60 days. 60 days, you're almost in the exact same spot. Why do you want to tie up your money for 60 days? And here we go. All right, these numbers aren't that bad. I don't know. Doesn't thrill my boat. All right, let's see what Yahoo chart got to say. So that gives me a good idea too. Here we go. 10 years. Okay, so 10 years ago, Ralph Lauren, we would have been looking at, come on, 82. So in 10 years, it went from 82 to 96. All right, they're paying out dividends all this time. Does it really float my boat? Not really. Okay, I mean, you can see the chart yourself. Look, way over here, 10 years ago, 80 something. Now we're at 96. That's not even a 10% increase in 10 years. That's 1% per year. No thanks. All right, so we're not going to do that one. Well, let's go back to, here we go. We didn't like Ralph Lauren, WDC. WDC. Okay, this is a nice looking chart. The high up here, 69.59. The low down here in May is 35.23. The last 90 days, we're looking at nice steady move upwards with a gap up. It makes me a little nervous. That gap right there was, what, a week ago? Almost 2 weeks ago? Always a possibility that that gap could get filled. It makes me a little nervous. So let's see what it says for the seasonality on this one. The seasonality according to Thinkorswim looks pretty good because we're right here. It looks like it's going to shoot up a little bit more. Okay, that looks good. So let's get back to standard and let's go to the other charts. WTC, WDC. Oh, no thanks. It's only got 4 years worth of data. So we're going to pass on that one right there. All right, so only 4 years worth of data. Not enough information for me. I like to have something that has at least 10 years. So we're not even going to do that one. WDC, no thank you. NUE. Let's go with NUE first. Let's go in here. That way we're not chasing nothing. NUE. How many years do they got? All right, they got 10 years, looking at a 4-day average. Okay, I can deal with this. This is not bad. Starting out low, he comes up into the dividend, goes sideways a little bit down, and you're looking at what, 3 weeks before you can get your money back out. Maybe you just want to collect a dividend here, or maybe an option. Let's see what the options look like for NUE. All right, I'll quickly see what Yahoo says about it first. I'm going to click on the chart. That brings us to the Yahoo Finance. Yahoo Finance is going to give us a 10-year, and this looks like it's going to be a no. I'm not going to tell you why. 10 years ago, she was at 64.54, and today she's at 62.87. So we could do the option on it, just for collecting, a few bucks, not looking to hold on to it. So let's see what the option does on this, because the numbers look good. I don't like the chart because look, she's going sideways for almost 10 years. And that doesn't thrill me. So let's see what the options look like and see how much we can make. Now see this chart here, this seasonality looks good. The other seasonality chart looked good also. So let's see what they're offering for dividends. So let's trade NUE, there we go. Okay, so tomorrow, what can we do tomorrow? This was fun because last week we did like 100% return for 1 day. That was cool. Okay, we want to do a vertical. She's at 67.89. So 67.89, which would be 67. Yeah, but oh, you're gonna have to wait until the market opens, because the market maker is the bid and the spread 57.65.75, and the stock closed at 67.87. Okay, so it's off. It's going to be off skewed, so you're not going to get a realistic number today. So we're going to have to look at first thing in the morning and see what it says. I hate it when the market maker does that, because how are we going to make a good educated trade tonight looking at these numbers? because the last trade for the day was 67.89. So hypothetically speaking, it should open up somewhere around there. The market maker is the only one who can change what the price is going to be. Okay, so just for the fun of it, the market maker has it 65.75. So if we look at the 62.63, we're looking at a 23-cent credit. Okay, and let's do 20 contract because it's only $65 stock. Okay, so I'm going to have to put up $540, and then I'm going to get a credit of $400. That is pretty close to 80 or 90% return for one day. I love that. However, I can't give you it accurately because of the skewed numbers. Okay, if the stock opens up at 65 tomorrow, 65.75 tomorrow, what the market maker says, then we should be doing great. I highly doubt it because it closed today, or the last trade was 67.89. But that's how you figure out what your return is going to be. This is how much money I got to put up, and this is how much money I'm going to make off of it. Okay, so the most I can make is $400. Okay, which is close to 80 or 90%. And my break even would be 62.77. Now 62.77 is right down here. 62.77, right down there. That's a big drop, but it would be filling the, see the gap? It would be filling the gap. 62.77, that's my break even. That means I don't make any money. Anything above that, I do make money. So that's what I'm looking for. All right, we're into the last 15-20 minutes, and I promised someone that I would show my trades were over the last year, because we got what, 2 weeks left of the year. So let's take a look at monitor account statements. Now these are all the trades I've made over this year in this account. Now I monitor 3 different accounts, so they're all going to be a little bit different. But this one I think is the one making the most money. I believe it's up to like 56% so far. It's like a 56% return with this account. These positions here are the ones I still have open. Okay, these are the stocks I have here, and then I have options. Okay, so my profit and loss, these are all my trades, my profit and losses. Okay, so now the ones over here that have numbers on them, those are the ones I still have positions. Okay, I got a position there on Douglas Emmett. I got a position there at National Health. I got a position here at Illinois Toolworks. Now, you only see the zeros. That's where I actually lost money. Look at that. Pfizer. I lost $5,000 on Pfizer. Ooh, how did I do that? I don't know. It happens. Coach. I lost $2,000 on Coach. Graco Inc. 3G. I lost $1,700 on that one. I remember I carried those people for like 3 or 4 months. I hated it. Finally took the loss and get rid of them. Okay, another one made a loss on was Anthem. Only lost $740. And then we have 3 break-evens, like a wash. Hershey, Targa Resources Partners, and Unum Provident Corporation. Those are the ones I lost money on. Now these other ones that you see here with the numbers here next to it, Amphenol Corporation, I'm actually in that position still. Okay, and I'm what, $60 in the hole on that one, $75 in the hole in this one. Was it Air Products and Chemicals? Now those ones I'm holding on to most likely. A lot of them are option positions because options are expiring tomorrow, the weekly options. So let's go down how many I actually made money on this year. Okay, so we got 1, 2, 3. I can't count those because I'm still holding those. They're not actually losers until they're losers until the end of the year, until I actually sell them, and then I find out whether or not I made money or lost money. So there's 1 loss, there's 2, there's 3, there's 4. That can't be right. Only 4 losses for the year. Okay. Well, these are potentials. Okay, because I don't really know. Don't really know. Okay. So let's count them anyway, just to give you a realistic view. All right, there's 1 loss, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, so I lost money on these 10. Not really, because I still have 6 of them. I'm still holding on to 6 of them. So I only really lost money on 4 of them. These 3 I broke even. Now the rest of them, from here, MTD all the way down, are all profitable. Hey, $100 there, 120, 130, 150, so on and so forth. Let's slide all the way down. Do we give them a count? Should we? Why not? Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58. All right, so 58 wins and what, 4 losses? That's not bad. At least I don't think so. All right, so it's quarter of. Answered some questions, showed you what my trades were for the year. That's for the year so far. Now, like I said, from here up, just the ones with the numbers, I still actually have positions. All right, let's market value. Let's go there. Okay, these are the ones I have in positions still. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. So I got 9 positions at the moment. How many losses at the moment? Okay, out of the 9 positions, 2 of them are in the negative. I think that's pretty darn good. Okay. Anyway, back here again in the UK. All right, let's go over some more trades because we got, what, 15 minutes left? So let's see what else we're looking at. KSU. KSU. All right, the high for hey, look at that. I got 600 of them. Okay. KSU, the high is 100, and the low down here is 63. And right now she's around 85. Let's see for the last 90 days. Not bad. Okay, we're looking at KSU, right? Putting the software here. Well, like I said, you get the software from the 10-minute trader being a member. That way it allows you access to this one. KSU is looking like a 4 years worth of data. So why did I buy this? Oh, okay, 4 years worth of data. Let's take a look at the options on KSU. KSU. Count positions. KSU. Here we go. Look at the trade for KSU. All right, so I bought 600 shares of KSU at 85.35. Huh. I'm up 390. What does the chart say? That one says nothing. Seasonality for this says, ooh, look at that. That's probably why. That nice little spike right there for the last 2 weeks. It could be. Standard. Okay, so she's going sideways. The pennant. You can see that pennant forming right there, getting nice and tight. So she's going to go one way or the other. I hope she goes in my direction. I really do. KSU. Okay, we got a target price of $87.49, and right now she's at 86. So we're looking at $1.49 away. I'm still up 390. You know, I could bail early because I don't want to wait for it to hit that 2.5. You know, I'm up almost $400. Why not? That's an idea. Anyway, All right, so this account you see right here, profit and loss year to date, 56,756. So that's almost 57% for the year. That I started out this account with 100,000, so it gives you an idea. Make the numbers easy to calculate. So looking at about $100,000 and made 56% on that. So that's $56,000 off 100,000. That's pretty darn good if you think about it. I want to be able to do that all the time. Last year I didn't do so well. I think I liked 30% last year, or 40%. I don't know. All right, so that was them. So let's take a look at who else we're looking at. KSU, NY, NLY. Okay, get the high here of 1123, and the low down there at 857. And this is what she's doing right here. Now you have 4 down days in a row. 1, 2, 3, 4. And this is a gap. Now on down days, I like looking at the gap. So before we go any further, let's take a look at the seasonality and see what she looks like. All right, I'm going to say no on this one. This is where we are right now. This is going to shoot up a little bit and come back down again. Look at the downtrend. No thanks. I'm going to pass on this one. MDLZ. MDLZ. Doesn't thrill me that much either. It's a little bit of an up move. Let's see what the chart looks like. Okay, basically going sideways the last 90 days. I don't like that gap up right there. But then again, okay, 28th, had you gotten in 10 days prior to 28th, that would have been yesterday. So that would have been a buy for yesterday. And had you gotten in yesterday, she opened up at $44.90. It's only looking for a 19-cent dividend. So $44.90 and hit $45.77 for the high, which is an 87-cent move, which is almost 4 times what the dividend would have been. Okay, so you see that? 19-cent dividend. Okay, the date was the 28th. So to get 10 days prior to the 28th would have been the 14th. So you get in the first thing in the morning on the 14th, which would have been yesterday. Okay, it opened up at 43.17. Okay, and hit a high of 43.60, so you would have been out on the very first day. But had you had a trailing stop, you would have been gapped out with this big, huge gap up from where it closed. Okay, it closed at 42.83. Okay, and then today she opened up at 44.90. That's a big spread. And it went all the way up to 45.77. So that's a nice move for MDLZ. That's if you've gotten in on that one. AGNC. Oh, you know what? For the fun of it, let's go to MDLZ and look at what the software says for the... Okay. All right, let's go back to MDLZ. MDLZ. Okay, she's at 44.50 area. Okay. 44.50, 45. Now we're going to do that one. I'm going to do that one right here. 43. And what are we looking at? A 6 cent credit. That's not a whole heck of a lot because you're it's a big spread. $18, but that's for the 44.50, which is right here. You get a gap here, which most likely going to end up being filled tomorrow. Could be. I can't say, but there's a lot of red in this chart right here. Red. You get 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 down days and 5 up days. That's like a 2-to-1 split. No thanks. Kind of weird. All right. Anyway, I wouldn't do this one. because, I don't like that gap up. Look at the volume spike. Volume way up to there, and the average is usually way down here, so that's like a 50%. It's almost 100% increase in volume. Today's that big gap up on that one. All right, don't have to pass on this one if I don't like it. All right, so that's our hour. Hope I showed you everything you wanted to see. Ask me any questions. I still haven't quite learned out how to get live interactive questions all at once, so you guys can ask me as I'm doing this. But like I said, we're still plugging away, still learning, getting a little bit better. The layout and the just the flow is going nicely. Anyway, this is James from the 10-Minute Trader. If you guys want to get in on using the software from the 10-Minute Trader, we have the software here, which gives you the seasonality chart one on top of another, so you can see what it's doing, how well it's performed with the average for actually hitting the targets for the dividends. That way you don't have to hold it for that long a period of time. Just grab the money and get the heck out. That's that one. And here's the other charts of the software right here, which allows you. Hey, here's John Deere from yesterday. Remember that? John Deere from yesterday. And CMCSA. We got into that one yesterday. Last week. CMSCA. So let's see what it's doing today. Just because it was a tip that I gave last Thursday. Let's see if it's still there. Yeah, here it is right here. CMCSA. CMCSA. Comcast. Now I remember distinctly last Thursday. Had you did what I said last Thursday, you would have gotten in first thing Friday morning. Now I got in first thing Friday morning. And I ended up buying 2,000 shares of CMCSA. But I did 20 contracts, and I got 110% return on the 20 contracts I got. I got stuck with the stock, and so I ended up buying the stock at 69. Okay? Hey, is that right? No, this is still the spread. Is that correct? Yeah, 69.50. Okay. That was in the other trading account. That's right. So the other trading account, I got the 2,000 shares of Comcast. So this one, looks like I'm going to make money on this one because tomorrow I got the 69.5. So 69.5 is right about here. So the odds of it staying above 69.5 and then that, I make money all on that one. That's nice. $400 today. Not bad. Okay, so don't really have time to jump into the other trading account. Oh, wait a minute. Actually, I might be able to do that. No, let's just stay here. Anyway, CMCSA. Last week we showed it. Last Thursday. Let me see what last Thursday was. This is this Thursday. So last Thursday was right here. Okay, so opened up at 69.17 and it closed at, that's right, it closed at 69.48. So I ended up buying it at 69.50 because, yeah, on Friday, see? This was Thursday, right? Hit a high of 69.48, and then Friday she closed at 69.45. So I was 5 cents off of my target from last week. So I made 110% on the 20 contracts that I bought on CMCSA. Okay. However, first thing Monday morning, here she is. She opens up at 69.03, and I'm the proud owner of 2,000 shares of Comcast. Okay. So what did I do? I went and I sold them for the exact same price I paid for them, earning me another 9%. So as long as Comcast closes out the end of the week above 69.50, I make my money off of this account here, my 20 contracts on this account, and I get called out of the 2,000 shares on my other trading account, and I make 9% for the 5 days. Okay? Doesn't sound like much, but let me tell you the difference. The 20 contracts you make 110% return on. Great. It's only like $500 for the day. One day, $500. Not bad. However, 2,000 shares of Comcast cost me, I think, was $14,000. I think it was. Let me quickly check. CSA Comcast. Let's go to 2,000 shares. All right, $76,000. Okay, so $76,000. If you're buying it at 73, right? Let's get out of there. I would buy it at the 73, and guess what? I would turn around in a week from today. Let's get out of here. Oh, I hate that. Look at the spread. 67 to 73, so you're not getting an accurate number. Okay, because the price is here at the money is 69.88, which is close to 70, which is right here. This is at the money. And they're giving me prices way out here, which is not giving me an accurate amount. So I can't give you a good explanation. Anyway, so the 9% I'm making off the CMCSA that I sold first thing Monday morning is somewhere, what's 9% of 76,000? All right, clear. 76,000 multiply 0.09, and that's going to equal, all right, $6,800. Huge difference. Okay, so make 105%, 110% off of the 20 contracts, but it only comes like $600. Okay, 9% of the 2,000 shares, as you can see, is $6,800. Big difference. Okay, so let's get out of here. And we're going to close up for the day because it's 10 o'clock. You guys have a great day, and I will see you next Tuesday where we go over the new tips for the week. And see how Comcast actually worked out in John Deere, because those are the last ones I gave last week. This week, I don't think I really gave one. Yeah, I did. John Deere.